Welcome to Markets Now. I'm Michelle Rook with Seifried, Zaner Ag Hedge. Livestock ending lower as well as the wheat market, but corn and soybeans to the plus side on Wednesday. And Ted, let's talk a little bit about the row crop sector. First of all, corn. Did we just see a short covering bounce, or is that market maybe trying to put in a little bit of weather premium?
Yeah, no, I think corn is maybe trying to put in a little bit of weather premium, but as we put in weather premium, that gives reason for a short covering rally. So the two of those could go hand in hand. We've been talking about planting delays for corn, and even though we're on top of the 5-year average, I mean, we certainly haven't experienced major planting delays as far as what the reporting has said. Now, this is the week that we're curious. What is it going to look like when we see Monday's crop progress? I think most of us are expecting very little advancement in the past week or in this week, really. And so those planting delays could start to develop and also maybe compound if the forecast continues to be wetter. And it did get a little bit wetter midday today. So that's why corn found some strength there later in the day, or one of the reasons why corn did. So it's the time of year where we put in that sort of weather premium. And when you have the funds in a big short position that hasn't really been covered yet, it does put them at risk, and they are technical traders. So for the fact that we had a reversal higher day that closed above the cluster of moving averages, the 20, the 10, and the 50 day, all trading within a penny of each other, or all sitting within a penny of each other, and closing back above that could be a catalyst to get these guys to cover more of their shorts. Now, it was a bit of a holiday, May Day. That's a bigger deal in other countries of the world. So the volume was a little bit flighty today. So I think we'll have to see follow through tomorrow in order to really get the funds to feel like they need to cover those shorts. But yeah, I think a little bit of weather premium is warranted for the corn. Now, if there's a dramatic change in the forecast, as is a normal weather market, we'll take that back away. But at least for now, there is a concern until we get that corn crop, further along planted. I'd say 60% planted. There is that risk, and there's that sort of uncertainty and a little bit of nervousness about the forecast.
Yeah. Soybeans and soybean oil had a terrible day yesterday. So the bounce today, was it just technical, you think?
Yeah, I mean, we had gotten really oversold in soybean oil into new contract lows. It was due for a bit of a correction on the oil share. So soybean oil was able to bounce a little bit, and that's despite crude oil being lower. So it's interesting. A lot of people talking about how soybean oil is trading as an energy nowadays. Well, that really hasn't been the case since the beginning of the year, Michelle. But now, yes, I think we were just technically oversold. We got a little bit of a bounce. And that actually, I think, allowed soybeans to have a little bit of a bounce as well. Now, we didn't take back all the losses from yesterday, so it didn't really change much on the soybean chart. It didn't really change hardly anything at all on a soybean oil chart. It just corrected the relative strength index a little bit.
The meal market got a little push up here for a couple of days because of the threat of an Argentina strike. What do you know about that? And do you think it's going to have an influence on the market? And what's going on with Argentina's crop? Because I know they've been having a tough time getting it out of the field.
I think the Argentina thing, well, first of all, it sounds like that's getting resolved. There might be something else coming on down the line. And like I said, maybe there's going to be something coming from Brazil at some point. But, to some extent, we get a little bit jaded to those things. If we see that show up on next week's export sales report, then there's something to get a little bit more excited about, but I'm not completely convinced that we will. As far as Argentina's crop, that is a big question mark. We've seen the Rosario Grain Exchange really cut their corn estimate dramatically, 7 million metric tons, based on diseases carried by leafhoppers, which are grasshoppers in my book, by the way. And that's just we had been seeing some reports of that, but that is a big drop. I mean, that's over a 10% reduction. So what the reality is there, and by the way, the USDA attaché did follow suit on the last WASDE report, but only to the tune of about 2.5 million metric tons. So what the reality is very murky. We're super really wondering what's going on with that Argentinian crop. We'll get to know more about it as harvest progresses, but that's not going super well for them either, and that could start to bring in some quality concerns. So that is a little bit of a friendly factor for the markets at the moment. The problem that we're seeing, again, Michelle, is the export sales. If we're going to have problems with other producing areas in the world, they need to translate into more sales for our products, whether it's soybeans or soybean meal. One way or another, we need to see those bigger sales. If we see the bigger sales, then we know there's a problem and we can get excited about it. if we don't see those export sales, it's kind of like, does a tree, or if a tree falls in the woods, does it make a sound? Well, if there's a drought in Brazil and we don't get the export sales, does it even really matter? And the answer to that, for our domestic prices anyway, is that no, it really probably doesn't. So again, I think the next couple of weeks export sales reports are going to be really interesting.
So what about the wheat market? We did set back. Do you think that market is due for a bigger correction than what we saw here today or not? Is the rally over?
Michelle, we had about an 83-cent rally off the short covering rally that we had that culminated towards the end of last week. And since then, we've had a pretty decent drop, taking about a third of the move back. We've also run right into the 100-day moving average. We briefly got below it today, but then ended up closing back above it. So if you want to talk about a correction of a short covering rally, we met those objectives today. So now is really where we prove out whether this is going to be a continued short covering rally, or if that was just a one-off based on some weather concerns that, at least in some parts of the world, have gotten a little bit less concerning. Now, in others, like the Black Sea area, there is still a lot of concern about the crop there. So I think there's reason for wheat to continue to put into a premium. But whether the funds decide to do that or not or cover their shorts or not is a really big question. And again, we're going to find that out over the next couple of days. But I think a lot of that might have to do with the corn market. If we start to experience more of a short covering rally in corn, I think that would spill over to wheat, while it hadn't done that vice versa. Well, like I said, we had about an 83-cent short covering rally in wheat. Corn couldn't manage more than about 15 cents, but maybe the timing just wasn't right for corn at that moment. Maybe the timing for corn is changing or getting to that point if these forecasts continue to be concerning for planting. And then maybe wheat does kind of follow along, because wheat, there are correlations between corn and wheat, but king corn might be a bigger influence on wheat right now than wheat is on corn.
Well, Ted, we did get the FOMC announcement today, and rates left unchanged, but the stock market took after the press conference. And so obviously the market is kind of wondering what's going on in terms of whether they're going to start cutting interest rates and when, right?
Yeah, Michelle, right. And there wasn't a huge expectation for a big interest rate cut or an interest rate cut on this announcement. What we wanted to hear was the wording and what they were going to say about it. And for clues for upcoming meetings. And, it wasn't an immediate reaction from the stock market or really anything. We had to kind of think about it and actually read through everything and hear the announcement. But I think the key there is what the Fed's doing on the quantitative tightening measures that they have had in place here. Ever since they've been really trying to fight inflation, and the fact that they are easing quantitative tightening, going from 60 million monthly cap to a 25 million monthly cap on their repo starting June 1st. One, that is a little bit friendly for the markets, but two, I think as the market thought about it for the minutes after the announcement happened, and as Jerome Powell made his speech, I think the market's looking at that as a key to saying that, okay, maybe we can start to expect a rate cut for the next meeting, as long as we don't see inflation numbers really tick up aggressively between now and then. And again, I think that is what the stock market sort of keyed into there later in the day, and found some strength, and had about a 60, almost 70-point reversal in the S&P from when that announcement was made to 30, 40 minutes afterwards. So yeah, again, it's the reading in between the lines, because again, leaving rates unchanged in and of itself isn't terribly bullish for the stock market for really anything, but for the fact that easing quantitative tightening is happening, and by doing it more than half of what they had been previously, I think that is the market reading between the lines, saying that this Fed or this rate cut might actually be coming in the next meeting.
What about the cattle market? Third day down here, and the funds continue to trade on HPAI fears or bird flu fears. Do you think we're going to be able to hold these April lows here?
Yeah, we're really worried that we're going to find it in the beef cattle, and if that happens, what does that mean? Does that mean we call a bunch of a good portion of the herd? But really, what that means is that packers are going to be very, very reluctant to be buying, because they have to take on a lot of extra risk and potentially a higher cost on testing So that would put a lot of pressure on cash prices and therefore put a lot of pressure on futures prices as well. So, we've had two pretty sharp down days. And the chart doesn't look good, Michelle. It looks like we should probably see some follow through. Now, the interesting thing is, like we just talked about, with a big reversal in the stock market, do we get more excited about what domestic demand might be in the meantime? So, that sort of, I'm not going to say it's an offsetting factor, but it was a bit of a positive thing that the cattle market was not trading during normal market hours. So we'll have to see how that reacts on Thursday. But yeah, there's just a lot of uncertainty going on surrounding bird flu and the beef cattle herd. And while that uncertainty is in place, it's going to be hard to get a sustained rally. It's going to cause speculators to want to run for the doors, which we've seen the last couple of days. And it really does open the door up for some more downside in the cattle market, well, livestock markets as a whole. But the cattle market just has this tendency, Michelle, to really overshoot the mark when it comes to both finding upside values and finding downside values. So you worry that this slide might be something that continues on for the next few days.
Thanks for joining us to Seifried Zaner Ag Hedge, and that's Marcus Dow.